Hey guys, good morning. Just still getting back into the swing of things, slowly making some changes and moving along here. But I know you guys are asking about. I don't use this on SVXY. I know you guys are asking about SVXY, and I haven't really traded it. Well, I haven't traded much lately, but I haven't traded SVXY lately until yesterday. Um, the reason is I'm not really into buying this. We're up towards the top of the channel. I like SVXY when it has a long tail pullback, intraday only at these levels. I'm not into buy and hold here. The reason I don't think that it's good for a buy and hold here is a few things. The market is closer to the top of its channel on the S&P. Haven't hit my target yet, but I still think that's in the works. We have time. But in the intermediate term, I noticed that things like TZA, the small caps, have already started to roll over a little bit. They actually started rolling over about a week or so ago, and it's kind of got me a little bit cautious on the market here. Nice rebound in SVXY yesterday from the lows. It did complete the cycle that I expected. I was looking for 101.30, and you're talking $100 ETF here, ETN. It's hard to nail it down to 10, 20 cents. We did hit literally within like 3 cents there. We bounced. We went back down through there, but as I mentioned on StockTwits, this is a time correlated thing. When you get into those areas, they cannot hold those areas for very long. So you can't use stops on this unless you correlate them with time. The top end I thought would be 107.20. On the first bounce intraday, I didn't expect it to get past 106.80. That's why I told everybody to sell on StockTwits. We did pull back again from 106.80 down to the 101 after being at the low of the 104 area. So there was a couple trades you could have done there. You could have bought UVXY at the 106.80 when I called it out. And if you were super smart, which I wasn't, you could have sold it at the 101.20 SVXY. So it would have been like a triple play. And anyway, in any case, SVXY was definitely interesting yesterday. So I'll try to nail down the price points today. Like I said, there's a few things I don't like about it here. I always like it when it pulls back sharp in a market that I still think has more to go to the upside, and it isn't really, it's when I look at a lot of stocks that I follow during the movement of the intraday, market, I don't get panicky because I see a lot of things like Roku, super strong. You don't see stuff like that. I look at Amazon, we're down, yeah, but it's $1,000 stock. There's things that I look at to kind of give me a gauge of how, what kind of fear the market really has at the time, or is it just a simple unwinding of an overbought condition? And yesterday just looked like an unwinding of an overbought condition, so I wasn't really panicking. But let's take a look at a couple things here in SVXY. All right, first things first, there's about 5 or 6 lines. I'm not going to make a spider web out of this that I follow, but if you're wondering how I got the 101 area, I don't ever use, very rarely, horizontal resistance. If a stock's going sideways, then I think horizontal resistance is applicable. If a stock is in an upward trend, I use upward trending lines. If a stock's in a downward trend, I use descending lines. So this is one of the lines that I drew, kind of gave me the 101 area on SVXY. There is some other lines that I drew that were tighter in that I can show you as well. But what I don't like about SVXY here, that the reason I said to sell to a couple guys before the close, it was lucky to get the 107.20 in the after hours. I don't like the way the MACD divergence is occurring here. And just really quick, remember when we draw our lines, we want to look at big moves and then pullbacks. Where did we see buying after a big move pullback? I would see the tails here, but even in this area here, big sharp move, sharp pullback, where were they willing to buy it at? And you can see the breakdown below there and then the regain. Big moves and pullbacks, big moves. This was a crazy tail here. That would probably throw off a chart, so I wouldn't use that. But big moves and pullbacks, you can see them here as well. So here's my concern. You have the climb in the SVXY. The market definitely dragged it up, puts it in a very vulnerable position. And what I mean by that is, like I always say, it's stairs up, elevator down in SVXY. This move was almost artificial, but it had to do more with the market. I know you're saying, well, no kidding, dummy. The market, the SVXY and the futures trading in the way, backwardation and contango and all that good stuff with the VIX futures kind of incorporates into the inverse as well. I get that, but what's happening here is that SVXY can continue to climb if the market is is just neutral, and it could also drop when the market's in a positive posture in smaller time frames. But for SVXY here, as we continue to grind higher, and then you have the sharp pullback and then another move and another higher high, we never had a crossover here. So you have basically a bearish cross here, but you never get the bullish cross back over, even though you get a V recovery here. So you go back up and you can never cross back over on your bull, even though technically you did cross back over. So this is a little bit concerning here, no doubt. I do like to see this high volume, so it probably did wash out a lot here. So in order for it to make a lower low than yesterday, we probably would have to make quite a bit of a lower low than we did intraday on the SPY yesterday as well. So we're down a little bit in pre-market on the futures. Nothing tremendous. Maybe the sharp drop yesterday got a little bit of everybody's attention. Understand one thing though, that a lot of these pullbacks, there's still money on the sidelines. So then it starts to turn into a shift between how much money's left on the sidelines to come into the market, how many guys think the top is in and want to get out. Once again, you have this little weird tug of war going on. So there's nothing really fundamentally it's changed to indicate the market should roll over and have a sharp correction here. And then you also have the, extraordinary amount of money still on the sidelines, believe it or not, looking to get in the market. I'm not going to get into all the details of that, but you do have this little tug of war, and kind of what you start to see is that, the guys are selling at the top, you get a little bit of distribution, the guys are buying the sharp dips, and you kind of get this little, indecisiveness. So I wouldn't expect any sharp moves in SVXY today. And a lot of times when we trade SVXY, it's definitely doing our homework ahead of time, looking at where we think things are going to line up, and then you just do it. It's hard to explain. If I say, 101 is an area to enter, and you start out at the 104s and you shoot up to the top end, the 106.80, you make a couple points, you get out, you kind of wait for that 101. It may not happen. Yesterday it did happen, and then what do? You buy it. Honestly, you got to set some type of a stop. If you want to make it a loose stop, like a 2-point stop, that's fine, but you don't want something happening intraday, a terrorist attack, something crazy could really, especially with the vulnerability that SVXY is in currently in this overextended position, you don't want something coming out intraday and just get completely crushed 20, 30 points. And over time that can come back, but the technical damage really does occur, then you rely on the market being super strong to pull you back up to where you were before. This action here that we saw, and then regaining the high here after breaking down technically below an area where we'd want to see it below, was extraordinary to come back up and then not only regain that ATH and you push higher from the all-time high. So extraordinary action, no doubt about it, but we know the name of the game, short volatility into the ground. Ultimate complacency abounds. So let's look and see today what we're looking at. I kind of incorporate where the futures are, a general sense of the market, look at some earnings. I throw a lot of that into this little mixture of how we try to figure out where SVXY is going to trade. So it's not easy. Today would be a difficult day. Yesterday was a little bit easier because the sharp moves was kind of expected, and I didn't know whether yesterday or today would be the 101, but they occurred yesterday. So I'm not going to spend too much time on SVXY, and I'll try to give you some numbers once I'm done here. I won't bore you with all the stuff I look at, but here's a 10-day, 10-minute, and you can see this is buying right here. This is obviously selling to get to that point, but this is guys jumping in, and once you get past these 2 points right here on the 10-day chart, that's intense buying. They want to buy the dip on that. So just another quick glimpse at what I look at here. I try to get into the fat of the candles on the 5-minute charts. I don't want to go down to the bottom. I want to try to catch as many areas as I can. I bust right through here. I need to tag that one, so I touch the bottom of it. I don't want to go too high up into it because I'm kind of getting too far away from these lows here. I'm into the fat of these 5 minutes. I'm into the pivot of this, and then I touch the bottom of there. So you can see the gap. Nobody can predict that. So this was the opening in pre-market. Then you have the bounce back up. So this is a pivot here, and we would say that maybe the 107.73, if we get a good recovery today, would be a little bit of an area of resistance, not the top of this candle and not this trend line. So this breakdown in here would be a resistance for me, 107.70. So if the market gets a good recovery here, maybe somewhere in the 107.70, 107.80 would be your top end. We're still a little suspect in pre-market, but we're definitely not in panic mode here. I'm going to probably be boring you guys here. So now I'm looking at a 2-day 1-minute chart. I kind of want to look at the V areas here. What I'm looking at is the big dip, and then the attempted rally, the pullback, and they were comfortable holding it through the L peak. They sold back in here, so it's kind of creating like an inverse head and shoulders. And this is an area that I look at as well. Now remember, we're looking for consistency in the market here. Nothing, no crazy outlier sell-off here. All these numbers, you just throw them in the garbage. They're not going to matter anything. So 102.90, assuming the market doesn't get any crazy selling here. It is a Friday. Might be another stretch area. Remember, these numbers can be penetrated, but it's hard to hold under these numbers. So 102.90 might be a low area. And let me look at one more thing. All right, so close to the high 107s, 106.20 is probably going to be a little bit of an area that is going to be kind of resistance. I'm not interested in this until at least the low 103s, high 102s. And you know me, I'm kind of picky. I do miss stuff. So my preference, believe it or not, would actually be low 102s, 102.20, 102.30. Probably not going to happen, so I'm probably not going to be trading SVXY today. I'm always looking for directional changes, you know. Here was a directional change from an uptrend channel. Here's where it got back in the uptrend channel. Here's where it failed in the upward channel again before the big drop back. So these are important lines here. This is slightly overbought. 1 day over, closes on it. 1, 2, can't hold it, big drop. Remember, 3s are our number. So you ask how I draw these lines. This is kind of how I draw the lines. I'm looking for, you know, this isn't traditional traditional technical analysis. This is kind of, you know, my own mishmash of psychological, you know, directional changes and when they happened and how we regained them and whatnot. So, you know, these are important lines to me. I don't know if they make sense to you, but they preceded big directional changes, so they are important. They preceded this big move down. The break here from this uptrend preceded this big move down. Here's your intermediate channel lines. I want to know where they were willing to buy back in. Obviously the bottom of that candle, where we failed in this area, we opened up and went right through it. This line might be slightly off, but 1, 2, couldn't hold it again, dip back down, then we get back over. 1, 2, 3 days, we're on our way up. We failed at that line again, so this line is important. We touched the top of it, and we opened below it. We went above it 3 days, and then we were on our way again. We had a bunch of tails touch on it and a top touch on it yesterday, and then we failed. Big green candle, they bought the heck out of it. So these lines are important. This little channel line here is a little bit suspect in the bottom. The only reason I drew is because we had a bunch of touches along here, and then we had 2 closed touches here. So it is important. It's important that we stayed above that line. We stayed above it again. So today, obviously, we would like to see us close above the 106 area, and that's why I put the low 106s as an area of resistance. Doesn't mean we can't go right through it. It's important that we close above it, and as we hold above it, we want to see the market firm. We don't want to see some of our canary stocks start to roll over and stuff like that. So under that 106 area, we're going to be vulnerable. So let's just call it like it is today. I prefer low 102s. It's possible that maybe 103s would be an entry level. We may not even get it. 106.20 is our area of resistance in the area in the first top end, and then the 107.70, 107.80. If it goes above there, I mean, I can't even tell you. We'd have to watch it over the next few days and look at the market internals.